Mr. Aidan Yao is Senior Emerging Asia Economist for AXA Investment Managers Asia Limited. What is AXA's global macro outlook today?
Well, I think with respect to the global outlook, we have to separate the short-term and medium-term dynamic separately. So basically, for the near-term outlook, we have seen that the economic data generally surprising markets to the downside. And most part of that weakness is really coming from Europe, particularly centered on Germany. And Germany being the largest economic engine of the entire Eurozone economy, that's creating a lot of concerns about the health of the European economy as well. And that's really justifying the ECB's further quantitative easing measures and cuts to interest rate. In the US, we actually think that the balance of economic data is suggesting that the economic recovery is on track. Here in Asia, once again, I think the data has been lately surprising market to the downsides, especially in terms of the PMIs, the inflation prints, as well as retail sales. So overall, I think the economic dynamics from a cyclical perspective, it's really decelerating. And last week, we're seeing that the IMF came out with the October World Economic Outlook cutting global growth forecast as well. So that's really the near term where we're seeing weakness coming through. But over the medium term, we are still fairly constructive on the global economic outlook. So for next year, we have marginally revised down our 2015 growth forecast to 3.3%. And this sort of growth is really driven by the US economy. We think that the economic recovery is going to gain further momentum going into 2015. In Europe, sure, we've seen some cyclical weakness at the minute, but we think that with the ECB's monetary policy easing gaining momentum, and also there's a lot of debate about the further fiscal stimulus as well. We think that the economy will gradually recover going forward, albeit with a risk tilting to the downside. Within the Asia continent, we think that the Chinese economy will decelerate next year compared to this year. But with the global recovery broadly moving on track, that's providing export support for China, for Korea, for Taiwan, and for ASEAN economies. And we also think that with the structural reforms taking place in places like India and Indonesia, and not to mention China, we also think that the domestic demand will gradually recover as well. So that's why that we think that you got to look at the near-term dynamics and medium-term dynamics separately. Medium-term, we're still constructive, but in the near-term, there's a weakness coming through.
How do you see the central bank's policies unfolding in US, Europe, or Japan?
Sure, that's really where the divergence is taking place, and I think that's really responding to different economic dynamics among these three major economies. So in the US, as we mentioned, that the economic recovery is taking place, and we expect that to gain further momentum going into 2015. And that's really justifying the normalization of a policy by the Federal Reserve. We think that tapering of QE policies will continue, which means that the asset purchases will essentially be wrapped up fairly soon. I think right now the debate is really about when the Fed is going to raise the interest rate. Now, before the recent macro concerns and financial market jitters, we thought that the starting point for the Fed to hike interest rate will be middle of next year. And there will be a total of 2 interest rate hikes for the second half of 2015. Now, if we think that the economic slowdown is becoming more entrenched and more bull-based, and the financial market jitters is going to persist for some time, then that's obviously going to affect the Fed's normalization decisions. So chances are that that decision will be pushed later into 2015. But nevertheless, we're still talking about the policy normalization. The debate is about when and how fast. I think the stories are quite different with respect to the ECB in Europe and the BOJ in Japan. simply because the economic dynamics requires much more monetary support. And I think that ECB has already announced the asset purchase program along with the interest rate. So far, we haven't seen a lot of macroeconomic impact coming through, but we think that if the economy remains this weak, then there's a further pressure for ECB to step up on monetary policy stimulus. And I guess a similar story can be told about Japan as well.